Welcome to the second press briefing today from IATA. Pleasure to welcome you all here. Earlier this morning, it was automatic this morning, not so much to. All right. So once again, welcome to this press briefing. Topic is industry outlook. You all have received the press brief and the press release earlier today. We have our chief economist, Thomsen, who is here to help explain some of the what's behind that outlook that was presented earlier today by Willie in the main session, then in a little bit more depth by Marie in the last session, and then even more depth here now. So without any further ado, I'll turn it over to Marie.
Okay, great. So I'll try not to be too long-winded, which is of course a great challenge for me. And leave more time for questions, but we'll take questions at the end. Yeah. Okay. So of course, GDP is probably the most important determinant of activity in our industry, GDP growth, and this is what it looks like in the global economy at the moment. So we had that obviously really devastating recession in 2020. And then we had a very strong rebound in 2021 when GDP shot up to just over 6%. And then we've had, a pretty sharp slowdown actually since then. And now we're stabilizing around 3.2% for 23, 24, and 25 actually. So that's a very, unusual stability. And stability is obviously good for everybody. Otherwise, of course, one could say that this growth rate lacks a bit of fizz, and it would, of course, be amazing if we could grow faster, but at least let's just recognize that 3.2% is in line with the long-term global average growth rate, and it's obviously much higher than all the recession expectations that, were flown around last year. So, not bad, I think, as a growth backdrop for our industry. Not great, but lukewarm. I don't know. In Swedish, we have this unique word that nobody else has, which is lagom, and that's what this is. Lagom growth. Just FYI. Okay. Now, what's much more unusual is this that this sort of lagom growth rate is accompanied by red-hot labor markets. Still red-hot labor markets. You can see here on this chart the major economies' unemployment rates, and of course they sit at different levels because all countries are different. But what's shared here is that they all sit pretty much at or in the vicinity of their respective historic lows. So I like to say then that in this context we're somehow living a job-rich economic slowdown, which is in stark contrast to the jobless economic recovery that we had in the wake of the global financial crisis, if you guys remember that in 2009. So anyway, in my 30 years of being an economist, I've never seen anything like this. And this is obviously very good for our industry because more people are working in the global economy than ever before. These people are earning wages and incomes. Okay, those wages and incomes are diminished in their purchasing power by inflation, but it's still more important that people are earning these incomes than the loss of purchasing power of those incomes. So this is a very favorable thing for our industry. And of course, with these red-hot labor markets come higher wage growth. And I use US data very frequently as an example of the world, so to speak. It's not necessarily copy-paste everywhere, but it tends to be a good example of what happens in general. So wages have shot up, and in the US they have come off their highs, but we can understand that at nominal wage growth of 4.7 and inflation at 3.4, we have real wage growth still happening, and that is good on the demand side, but it adds to our costs on the expenditure side. And it's interesting, I think, of course, that it's interesting to ask oneself then that why are these labor markets so red hot? If this is so unusual, we must go looking for an explanation, no? And I think that one of the explanations, certainly one of the contributing factors to these strong labor markets, is the fact that the world economy today is a service economy. So here you see, I don't know if you can read, but we will share the slides, and you see the percentages per country of a selected number of countries that the service sector represents in percent of their total GDP. So a very large number of countries obviously have most of their economy's activity in the service sector. And the global economy is the red bar here. And according to these figures that come from the World Development Bank, from the World Bank, sorry, is almost 62%. Yeah, so the global economy is 62% services. And this is the point at which I often see if I can try to amuse myself by asking you guys a question. I don't know if you will lend yourself to this exercise, but if I ask you, when do you think that the service sector became larger than the manufacturing sector in the US? Let me give you three options. Yeah? You could say the 1960s, the 1980s, or the 2000s. Let's do hands up. 1960s, anybody? Yeah. 1980s, 2000. Yeah, so this conforms to my experiment that I have been running for a long time, which is that most people answer around 1980 something or another. So please don't feel humiliated, you are absolutely normal. But the real answer is the early 1960s. Yeah, so it's, for as long as I have been alive, basically, the service sector in the US has been larger than the manufacturing sector. Now I can leave you guessing how old I am, a little bit. Anyway, yeah. So that's interesting, and then therefore, we now see perhaps a little bit more understandingly why inflation then is a bit sticky, because the type of inflation that is high at the moment is service price inflation. So this is the larger part of the economy, it's where most people work, where most of the activity is, and therefore it's also where most of the price pressures are found. So this is US consumer prices and its components, and the purple bars are core services. So this is very much a service price inflation phenomenon linked to what we just have looked at. And another thing that's really interesting, I find, with this service sector evolution is that it has, over time, prolonged our expansions in the business cycle and arguably shortened the recession periods. And this is obviously very good for everybody. Yeah? If we could never have a recession again, that would be amazing. It's more important to not have recessions than it is to maximize GDP growth. So the last expansion into the 2020 recession was about 140 quarters long, US world record, and then the ensuing recession was the US shortest in history at only 2 quarters. So I think services are contributing to these red hot labor markets. That's on balance good for us, and it seems to also on balance be positive because it helps the business cycle to stay positive. But, we still have this service price inflation problem, which leaves interest rates for the most part, which leaves inflation rates for the most part too high for many central banks to cut their policy rates. So in the US, it's the latest number is 3.4%. The target is 2%. That is a too great difference for any radical rate cuts in the US for sure. So maybe towards the end of the year, and I would stress maybe. But then again, not all countries are the same, that's for sure. And the red line is China. So China has lived in a very different kind of environment. They've been in deflation with negative inflation, so falling prices. And their latest number just managed to turn positive. So for them, that was actually good news. They might turn the corner on their deflation. But the other major economies are still in the opposite side of things, and we can therefore not necessarily expect lots of policy rate cuts this year. And that means that real interest rates will have to rise further, because if the nominal interest rate stays the same and inflation comes down, then obviously the real rate will go up. So this means that everything that we do tied to interest rates is becoming more expensive, and that's a problem for airlines because we have a lot of debt as regards the industry as a whole, of course, after COVID. And these higher interest rates in the US supports the dollar. So we've had a 15% appreciation of the dollar since 2021 in real and trade-weighted terms. So that's quite significant. You can see the blue line against the other currencies, the euro in red, the yen in yellow, and the CNY in black. So a stronger dollar tends to be negative for growth, tends to dampen global growth. And it also adds to costs for most of our airlines, all the airlines who don't earn their income in US dollars, and not to mention the fuel bill. So this is a handicap that we are also facing. And mentioning fuel, of course, you have jet fuel, Brent, and the crack spread on the left, and you have some sustainable aviation fuel costs and price estimates on the right. So the red bars on the left are the difference between jet fuel prices and crude oil prices, and this is what we call the crack spread. So you can see that we've experienced a kind of structural shift, that historically, but from 2016 you can see here, the spread between the two used to be somewhere between $0 and $20 a barrel. And since 22, the spread is somewhere between $60 and $20 a barrel. So we have entered a new phase in terms of this crack spread, which is really negative for airlines because they buy jet and not Brent. Yeah, and jet is much more expensive than Brent, more expensive than it used to be in relative terms. So that's a negative development for us, which we think is very much tied to the fact that there's not enough refining capacity, and the fact that in the refineries, very often jet is not prioritized. So we think indeed that spread will continue to be on the high side, above $20. And then of course we buy SAF when we can, not that there's much of it, but when we can we buy it. And here you see on the right, the gray line is SAF production costs in the US with the credits that come under the Inflation Reduction Act. So US SAF costs in gray, European SAF costs of production in blue. So in a sense, if I can be so, if I can just summarize this argument, it's sort of the tale of two policies. Yeah, you have the incentive policy in gray and the mandate policy in blue, and guess which one we prefer? Yeah, and then we have the orange little squiggly line, which is sort of a bit of a traded price indicator of SAF. Yeah, not that much is traded in any kind of open market, right? Because this is a very small market, mostly private deals, and there's no published SAF price, no financial market. People can look at the SAF price like we do with oil prices, So that's also a problem that we don't have that transparency. But anyway, the point here is that SAF is 2 to 5 times more expensive than jet. Jet is a lot more expensive than Brent. And airlines obviously have a keen interest in making sure that that premium of SAF over jet is as small as possible. And that's why one of the, first of all, we do want to decarbonize, but we also want to shrink that premium, and to do that we need lots of SAF as quickly as possible. Another problem we are facing is the supply chain, so lots of delays in the supply chain for parts, for aircraft, for engines, for everything. And here we have, in number of aircrafts, expected deliveries in 2024 that have actually been downwardly revised by about, let's say, 150 airplanes, roughly speaking, and they have just simply been added to the 2025 outlook, which is a bit of wishful thinking. There's no real certainty today that that's actually going to, that the production lines will be able to catch up with those delays in 25. Yeah, so that's a fingers crossed kind of scenario. And this clearly caps the growth potential of our industry today. There's no doubt about it. Meanwhile, on the demand side, traffic is definitely holding up. People do want to travel, and the black dotted line is total traffic for the industry on the passenger side, which exceeded the 2019 level in February this year. And the blue line is domestic RPKs, revenue, passenger kilometers. The green line is cargo CTKs, so cargo ton kilometers. And the red line is international passenger traffic, RPKs. So we see that the international side is still lagging compared to where we were in 2019, but the industry as a whole has recovered the 2019 level of activity. And we can also see how the growth rates are, that, you know, we're still growing, but we can see that the pace of the growth is slowing. And so we're still expecting growth, but slower growth than what we've had in 2023. So per region, again, you know, when we look at the whole industry, there's lots of variation. You know, the industry average hides all the disparity that we have in the individual regions, of course. And here we have this stark contrast where Asia Pacific is the foremost growth engine in terms of passenger traffic, which is fantastic, but also explained by the fact that they were late in reopening their markets. So it's strong growth from low base, but still most of that growth is happening in Asia Pacific, obviously China. And the Middle East, on the other hand, are the leaders in terms of cargo CTKs, cargo ton kilometers. So those are the winners in those areas, and everybody else sort of sorts in somewhere in between. And cargo is not growing as fast as the passenger side of our industry, but it's also growing from a much higher base than the passenger side, because cargo was what allowed us to do so well, relatively speaking, in 21 and 22. And currently cargo is helped by this situation, which is air cargo fares compared to maritime cargo fares. And when the line drops, it means that the price of cargo is lower compared to the price of maritime shipping, and of course the opposite when the line increases. So you can see that currently we're sort of, you know, almost in the space of competitiveness that we were in these phenomenal cargo years of 21, 22. So contemporaneously, this is definitely a strong point in favor of cargo. And I am tempted to say, may it last, but I don't want to be so evil, because this situation is obviously because of the trouble that we have in shipping in the canals in this area, notably. So that means that the split between cargo and passenger revenue is sort of reverting back to where we were. So blue is cargo's share of airline revenue, red is passenger share of airline revenue, and most of the revenue growth is then on the passenger side. And in spite of all of these troubles and higher costs on pretty much every front, we still think that airlines will show a profit this year as an industry of $30.5 billion US. And that would be associated with an EBIT margin of 6%, which we can see, you know, historically speaking, is not bad, so to speak. And for the regions, it means that every region is making a profit and every region is improving on its results also from 2023. So that's pretty fantastic. And per passenger, it means a profit of $6 per passenger. But again, you can imagine, right, maybe I even have a slide on that, that's, do I? I didn't, sorry. So there's obviously a great spread around these $6 per passenger. In the Middle East, we have a little bit over $15 per passenger profit, and in Africa, we have not even $1 per passenger profit. So there's a broad range, but the industry average is $6 per passenger, and we still continue to insist that this is pretty much the price of a cup of coffee. Of course, it depends on where you buy that cup of coffee, but I feel safe with that statement in this hotel. No disrespect, it's maybe the best coffee in the world I read on the internet, so there you go. Thank you very much. That was it. I hope that was not too long. And yeah, thank you.
Perfect. Thank you very much, Marie. As ever, you've given us lots to think about, hopefully generated a few questions. And my question to you is, who wants to ask the first question? Maybe we'll try Adrian. Yeah, in the middle.
Hi, thanks, Tony. Adrian Schofield with Aviation Week. Just be curious to hear your thoughts, zooming in a little bit more on the Asia Pacific region, just in terms of how the recovery is going. Is it closing the gap with 2019, and is it closing the gap with the other regions, or has it kind of plateaued a little bit? Just talk about some of the dynamics there, would be great.
Yeah, I think obviously what we have noticed is that almost everybody has restored their traffic with China to pre-pandemic levels, except notably the US. So there are definitely some geopolitical aspects of developments in our industry that are unavoidable and that do impact these numbers. So that partly explains why we still have the size of the lag in international traffic in Asia, because Asia Pacific includes obviously China and the other countries, but it's very much dominated by China, of course. But otherwise, as we could see, the domestic numbers are higher, and that's an advantage for China. It's obviously a very large domestic market, and the other upcoming large domestic market is obviously India, and I don't know if I digress too much here, but sort of bouncing off the panel that we just had, that in a world where countries are starting to look more inwards, and multilateral collaboration is clearly challenged, its size is definitely an advantage in terms of aviation markets. Yeah, so this will favor the US and India and China, I would say, going forward.
So the Asia Pacific international lag is still getting smaller, do you think?
I couldn't hear the end of that.
Sorry.
Yeah. I'm sorry. It's obviously an age question.
Just the international traffic lag for Asia Pacific, is it still getting smaller, do you think?
Yes, they are catching up. They are catching up, but where the other regions, the way they fly to and from China has pretty much been restored or even exceed 2019 levels. That is not the case for the US, and that part might not be fixed in the near term. Yeah, so basically I'm saying that it is catching up, but it might not catch up to the same levels where we were used to seeing that, and in particular regarding the US-China connectivity.
Okay, thank you. Karen?
Thank you. Hello, Marie. When you talked about some of these broader economic shifts, if you like what you talked about the service industry and the crack spread, this industry is notoriously infamous for these these cyclical up and down, and nobody ever seems to actually predict properly when the next hit comes. Do those shifts make it easier to predict for the airline industry, where it's going? Does it make it more stable for the airline industry, whether that's for good or bad, but is it easier to predict?
Well, certainly that's the hypothesis that I'm putting forward, yeah, regarding the global business cycle and the global economy being more in services, and how, you know, what we need to appreciate, I think, all of us, is how generalized that trend is. Yeah, pretty much every country, you know, now has a very, very large share of their economies in services, and I am hypothesizing that this is a contributing factor to extending the upswings in business cycles and shortening the downturns. Yeah, so it's maybe a bold statement, because obviously I don't have, you know, centuries of data, because it was only in the 60s, of course, when this trend started, only in the 60s, but yeah. But no, that's clearly the fruit of my analysis. And if this is the case, that is positive in general, right? Because it is more important to have to avoid recessions than it is to maximize growth. So indeed, it doesn't feel very doesn't feel fizzy, right? The average growth rate that we are experiencing at the moment. I think in the US in particular, maybe we can see how people are not feeling it, yeah? And that's obviously a problem. But otherwise, if we could grow at the average forever and never have a recession again, that would be amazing. And it would take so much uncertainty out of our processes and allow everybody to plan and invest in a safer environment. So that's you know. I am definitely seeing a long-term declining growth rate for the global economy in the long run. You know, we're losing productivity and we're losing population, and you know, so the long-term trend is down. But if that can be compensated by a more stable business cycle and fewer recessions, then that would be really still probably a very attractive place to be. And we're a service industry, so we're well placed to benefit from this trend.
We'll take a question on this side.
Hi Marie, it's Laura with the Airline Analyst and Air Finance Journal. You use our data in your forecast, and we recently just did, Mike and I, a look at 115 airlines, and only of the 115 airlines with the results ending on September 30 and December 31st, only 54 of the 115 that we looked at had lower adjusted net debt than they did in 2019. And I'm just wondering if that's on par with what you expect, or is it slower, faster, or that's what I would expect at this point?
I mean, you know, of course it's all tied together. You know, low, relatively speaking, low profit means low capability of reimbursing debt, and you know, and it means weaker balance sheets, encourages everybody to have more debt. It's sort of a bit of a spiral that's hard to get out of, and for sure, our industry on the whole is carrying more debt today. Still, even if lots of airlines have reimbursed debt, the industry is carrying more debt than before the pandemic. As is everybody, let me stress that. Yeah, there's more sovereign debt, more household debt, more corporate debt, and more airline debt than before the pandemic, that's for sure. So this is a problem for all of us, and in every way. And of course, the higher interest rates makes that even more of a problem. And there's a particular problem for about 60 countries in the world that have, you know, that are on the verge of sort of acute debt crises. And you know, we're not talking about them a whole lot. So debt is definitely one of the bigger problems that we have in the global economy, and it's more expensive these days to service that debt, and that's true for airlines as it is true for everybody else. Yeah.
So we'll take a question just behind.
Yes, question from the backbenchers. This is Andreas from FEW. Marie, as far as leasing rates and ICMI costs are concerned, How do you value the trend in that? For time being, it's tight times for airlines, getting the right capacity, so these companies profit from that. How is your judgment on that?
Yeah, by the same token, you know, the trend has, I mean, certainly not inviting leasing companies to increase their costs, but but it would be to be expected that the trend is up, and because of the scarcity of the product, the interest rate environment, and also because of the overhang of all the planes that are still stuck in Russia. So, you know, whether the leasing companies get reimbursed for that asset loss or not, it still somehow feels like that will likely end up on airlines' P&Ls one way or another, either through higher insurance fees or higher leasing fees. So there too, yeah, I feel like the trend is definitely stacked in the leasing company's favor. And indeed, airlines tend to lease about half of the aircraft they operate and own about half of the aircraft they operate. So leasing is obviously a fantastic, I don't mean to diss the leasing companies, yeah. We're grateful for their existence and they are allowing us to have the capacity that we have, because it would be more challenging to buy all of these aircraft outright, of course, given the balance sheets that the majority of airlines have.
Okay, thank you. Maybe we'll take the question in the middle.
Hi, Enrique Perella from Business Traveler. I have a question on Latin America. Many things are happening, even North America, many things are happening this year with elections in Mexico, Venezuela, and Argentina. Argentina, as you saw last year with the new president, they're opening up again, and it's having a dramatic effect with the airline industry, the travel industry, and hotels even. So my question to you is, how do you forecast that, potential big changes in countries that have been historically dormant in the aviation industry, and all of a sudden things might change? So how do you forecast that, and what's your opinion on the potential outcome? Thank you.
Yes, excellent question, obviously, and indeed very difficult to forecast. But I would clearly argue that every country on every continent should build in aviation in their country's economic development plan. Yeah. We are, as we like to say in economics, yeah, we're a necessary, not on our own sufficient, but we're a necessary ingredient in anybody's growth plans and anybody's industries or activities. And I don't know if you were also in the room earlier, but you know, just these fabulous things that humanity has managed to do, you know, the vaccines, well, they would never have been distributed if it weren't for air cargo. And the James Webb telescope would never have been launched into space if we hadn't been able to transport it to the launch site with air cargo. So you know, I'm not making a political statement here. I think, you know, it's whether these elections produce left-wing or right-wing leaders. I think all of these leaders should clearly look to aviation as a catalyst for the economic development in their country. And that doesn't really matter if it's a rich country or a poor country. It will help all of the countries, but arguably, of course, have an even bigger impact in poorer countries. So that's not really I guess I'm answering left of center or right of center of your question, so to speak. So it's hard to forecast, but it's definitely something that we are, you know, trying to remind everybody of. Yeah, that this is not about transportation or aviation per se. It's about economic development.
Great.
Graham Dumbledale Business. Would you say or do you think the higher crack spread is now a structural change, and what could possibly happen to change that?
Yeah, what we need, you know, there are two ingredients here. We could have more refineries, that would help, or in the existing refineries, we could try to convince those people to produce more jet fuel at that refinery. And that's also what we alluded to earlier in the big room, that we are often not the priority. Yeah, it's easier for refineries to make money on diesel than it is to make money on jet. So they prioritize diesel. It's easier for oil companies to make money on fossil fuels than on SAF. So they prioritize fossil fuels. Yeah. So this is a bit of a, I don't know what to call it, an awkward spot that we're in, certainly in my appreciation as an economist. Yeah, that I feel that we are, as I said, you know, necessary but not sufficient. Yeah, so I'm not saying that, you know, with aviation everything is hunky-dory, but without aviation, that's how I see it. Yeah, that, you know, without aviation, no miracles can happen, right? With aviation, miracles are not necessarily the outcome. Yeah, you know, we cannot say, we cannot promise miracles through aviation, but we can know that without aviation, no miracles, right? And yet we are sort of not a big priority. So we struggle to get our fair share, so to speak, of both the fossil fuel refined production and of course to get people sufficiently engaged in our energy transition on the SAF side and so on. So what we want is for the whole world to have more renewable energy, and then we want our fair share of that renewable energy. Both of those are very challenging, because there are so many other industries out there in the world who will need the same renewable energy. So we are a bit scared, yeah, that we're going to lose out. And that will be detrimental to economic development, because without us, no miracles.
Yeah.
Hello, Dina Cameron from The National. I'm really fascinated by a statistic you dropped in there, many statistics you dropped in there about the profit per passenger is $6 on average globally, but in the Middle East that's $15. My pocket can confirm that that's accurate, but can you walk me through why there's such a big gap in that dynamic, and following from that, whether where you see airfares headed from here on out?
Yes. So, you know, I really don't want to speak about any particular airline, yeah? So please take these comments as 100% generic, and if they sound like somebody you know, that's by accident. But, you know, clearly, what do we need to make more profits? Well, we need efficient operations, yeah? We need high load factors so that the planes fly full, and we need a population that is very keen to travel and arguably not particularly price sensitive. Yeah, so if we have all of those conditions fulfilled, then arguably those airlines would make more money. And you know, that's not to point any fingers at those who don't benefit from such conditions, because often an overburdening regulatory environment can you know, make it harder for airlines to be particularly, you know, as efficient and effective as they otherwise could be. And also the competitive environment, you know, that oftentimes airlines are prevented from using consolidation as their growth strategy, whereas that is something that tends to be permitted within certain limits, of course, to most other industries. So I think we see some of that as well, yeah, when we look at the profit distribution across the regions in the world. We see a hint of that as well. I'm absolutely not arguing in favor of less competition, but also oversupply is not healthy. And it's not interesting for anybody in our value chain that airlines continue to be, you know, a bit financially vulnerable. Because obviously without airlines, you know, the rest of the value chain doesn't stand up either. So So I think, again, it sort of comes back to the earlier question, yeah, that these are things that the regulators should look at, yeah, that it should be a concern to them if they have an airline industry that doesn't manage to produce profits, yeah, because that's going to curtail their economic development strategy and everything else that sort of depends upon that. And instead, it's curious that, you know, the temptation often is to tax airlines, but if I'm an economist, if I want to tax somebody, I would go for the people with the money. I wouldn't go for the people without the money.
And Marie, just on that also, you mentioned regulatory burden, you mentioned efficiency of operations, but also availability of efficient infrastructure would also be a part of that as well.
Absolutely. And, you know, clearly we have capacity constraints not only in the airlines in terms of our difficulties of getting parts on aircraft. We have capacity constraints at airports, at ANSPs, you know, everywhere it seems in the value chain there are capacity constraints. And of course, you know, it takes a different kind of vision, yeah? You know, it takes a bold. What we need are these governments who really recognize that this is part of our growth strategy. So that's India, for instance, or Turkey, or are examples of countries that...
Or where we are.
Or where we are, of course, 100%. You know, absolutely. Where this is part of the economic development strategy, right? And everybody who does the opposite are going to at least not realize their full growth potential, and that seems like a shame.
Okay, we have time for a couple more questions. We'll look for people who haven't asked questions first. There's one in the back, I see. Yeah, just on the side.
Thank you. This is Itere speaking, the Daily Telegraph, the Netherlands. Again on SAF, maybe a bit boring, but yeah, what would be the best to, in your view, to ramp up with the production?
Yes. So, you know, I think that first of all, it is a phenomenal challenge. It's not a challenge that's so out of proportion that I don't think that is possible. It has been done. I think our challenge resembles very much that of the creation of the wind energy sector, for instance. So we should look at that, and our investment needs are similar to those of the wind sector when that market was being created. And there's a lot of good policies that were implemented in favor of developing that market that somehow, you know, people are just choosing not to use in favor of our needs. So that's bizarre. So that's the, you know, the first level of answer. Yeah, that we're creating a new energy market. We succeeded to do that very well with wind and solar. We should look at what was done then and try to replicate that success. Yeah, that seems rather self-evident. At the same time, you know, SAF is not the only thing that we can do, and also there are many types of SAF and things that we can do on the way. And of course, airlines are usually not fuel producers. We don't make airplanes, so most of the solutions to our decarbonization we depend on the kindness of strangers, as a famous literature person whose name escapes me suddenly. Anyway, never mind. I digress. So. What we should do immediately are all the things that we can do immediately. And what we can do immediately, particularly in this region, is co-process. Yeah? So co-processing is when you add biomass into the fossil fuel refinery. And out comes fuel that now has a bit of biomass in it. And of course it depends a bit on the refinery, but you can add up to potentially 30% of what goes into the refinery could be biomass. And then, you know, that would be instant CO2 emission savings. Yeah. So here, there's a lot of snootiness, you know, about which measures are kosher and which are not, right? And I think that this is not the time to be snooty or dogmatic or overly principled. We are absolutely not saying that we should do co-processing as the solution to our whole decarbonization, but it's something that could be done today. with instantaneous CO2 emissions benefits, and it would be crazy not to do that. Similarly, it's sort of crazy not to take advantage, as Willie referred to, the efficiency gains that could be had by the stroke of a pen in the European airspace, for instance. That's a crying shame that can't happen. So, we should really not leave any single stone unturned and look at all of these things while we are building up the new production capacity in biorefineries and in particular SAF production. So, clearly that must be better than sit and wait 5 years until we have that new production capacity, right? So we definitely would want all guns out of their holsters, and let's use all of these solutions while we're simultaneously increasing the SAF production specific facilities. Yeah, let's use the existing refineries, first of all, to do co-processing, and then we can use existing refineries and transform them into biorefineries. And then we can also build from scratch new biorefineries. We should do all of these things at the same time, as fast as possible. Yeah. I hope that sort of answered the question. Now, maybe the final point would be that, how do we actually make that scale up happen, and how do we get those investments to come to the renewable energy space? And I think that's an extremely pertinent question, because it's too easy today to make money by drilling for oil. Yeah, and it's very difficult to make money in SAF because, today we're using SAF made from used cooking oils, essentially. So it's already liquid. That's good, that's an advantage, right? When in the future we're going to use other types of ingredients to make the SAF. Waste, municipal waste, agricultural waste. These are not liquid, so first they have to be made liquid, and we start to understand why it's more complicated and more expensive to make SAF. Yeah. So we definitely need the governments to skew the attractiveness of these investments. Governments need to make it less attractive to invest in fossil fuels, preferably, arguably, by taxing the oil companies, and then provide incentives for production of renewable energies.
Okay, and if there's one last question.
There's a gentleman in the front who has been trying to ask questions.
Okay.
Tony, you're the boss. You pick who.
Yeah, you had one in the earlier press briefing, so just
that's fine. No,
just
spread the love. Spread the love. Yeah.
A little bit around the room. So there's one lady who's been very patient in the back.
Hi, I'm from Bangkok Post, Thailand. I would like for you to can you clarify why Asia, like the profit margin, are still lower than the average? Is it because China and Hong Kong open later? And from all these challenges you mentioned, is in the near term, like 2 or 3 years, more airlines are making more profit from flying? I'm not sure within the region over long haul flights, because there are more like still geopolitical thing going on, and the cost of long haul flight are still like a thing for both airline and the passenger.
Yes, and yes. Yeah. No, clearly this is one of the problems sometimes we have in how we collect our data, and we sometimes lack the ability to be sufficiently granular. So that's why our data is regional, and it's hard for us to be specific sometimes about the countries in the region. And clearly for Asia Pacific, that means that region is dominated by China. And I can unfortunately not exactly clarify the per country split in what's happening to traffic. So unfortunately, all of the region gets very heavily tainted by what's happening in China, which is positive after all, because they are now opening up. But since they open up later than everybody else, they are on that later growth curve. Yeah, so very strong growth rates from a low base, and still not quite where they were before 2019, in particular, obviously regarding the international travel. and the international travel is very tainted by the relationship between China and the US. So we can anticipate maybe a bit of a structural, I don't know what word to use, I don't mean to say downgrade, but like relative lack of fizz, yeah, I think that at least some kind of negative bias in the numbers can be expected from that now more difficult relationship on the international traffic side. But then the country is so large, the domestic market is so large, so in terms of total traffic, there's no doubt that China will continue to grow and profits will be made. And I hope that pretty much answers your question.